Welcome back, you legends. I'm Dr. Khan. Let's get right into this video. So what the heck happened today? 3% down on the NASDAQ, 2.5% on the S&P, 2.25% on the Dow Jones. Let's take a look at the different sectors. Red all over the place, except for, well, really all over the place, no exceptions. I was just going to say the best performing was energy, and it's still down 0.6%. The biggest losers today, communication services, led by that collapse in Netflix, where investors have been dumping stocks and running to safety. What safety? Well, the dollar. The dollar is finally moving back up. Look at this. I drew out this descending wedge pattern just a few days ago, and I was watching as the market tagged the support line once, twice, and now we are rallying. We broke out of this descending wedge in a morning star pattern. A morning star pattern, everybody, is when the market sells off, sees some weakness, further weakness, some indecision, and then boom, a big green candle follows that. So this is a morning star candle, and it's going to rip to the upside, continuing to crush the stock market. Remember, everybody, the dollar has a very strong inverse correlation with the S&P 500 and equities in general, and as the dollar continues to shoot up, the stock market is going to continue to sell off. Let's take a quick look at the stock market map. Red all over the place, again led by tech, communication services, and basic materials, as well as financials. Really, the only sector that managed to hold up just a little bit is energy, and it's still down significantly. Tesla is the lone green company in the big cap tech, if you want to call it that, or consumer cyclicals, consumer discretionary. Tesla is the only one in the green, but that's after significant losses the last couple of days. Now let's take a look at the daily chart for the S&P 500. And what do you know? We have a perfect double top formation that I talked about just a couple of days ago. We had that continuation of the selling right after the FOMC meeting yesterday, and then we had a continuation of the selling today. So this was a perfect double top. I did talk a lot about this in my last video a couple of days ago. In fact, let's take a quick stroll down memory lane and listen to this. Then the market ripped to the upside. We had the exact same opposite happen today, right? CPI missed, so that was a good thing, but the market gapped and then crapped. So we're seeing a mirror image, and I am 99% confident in calling the top boom right here. The charts don't lie. Now, with that being said, even if we see the market attempt a recovery today, something that looks like this, an attempted recovery, even if we see that, that will not invalidate this double top formation. And again, this top will hold. And in fact, I took a $100,000 position betting that this is in fact the top. Again, guys, you can. And what do you know? That's exactly what happened. Look at this. The market did try to recover. It almost tagged the resistance line once again. Then it failed after the FOMC meeting, after the Fed raised projections for the terminal rate by 0.5%, a half percentage point, which means at least 2 additional rate hikes of 25 basis points by early next year. That failed. We saw continuation of the selling. This support line was the last resistance by the bulls. Unfortunately, the bulls could not defend. Bears overpowered the bulls, and we had this gap and continuation of the crap. Now, I did say that I took a $100,000 position on the S&P 500 when I called the top just a couple of days ago, and I did that, and that position is now $50,000 in the green. I am up 50% already, and I expect that position to net over 500% by March. That's right, 500%. So I'm looking to turn $100,000 into 500,000, $500,000 by March. I took another short position that I'm hoping to net over 1,000%, and that position is already up 100%. That position has already doubled. So I did make big bets at the top because I was so confident, because the charts don't lie. In fact, I'm going to show you my position right now. Here it is. I took a put spread 380, bought the 380 put, sold the 375 for a put spread. I paid $1 for each spread, and I sold some today. I unloaded some today for a 50% gain. I locking in some profits, and I plan to continue to short the market on rips. In fact, guys, I want to show you some of the amazing trades taken by our legendary members. By the way, guys, most of these trades have been taken purely by the legendary members. They're not my trades. They've taken those trades. All I did was provide my guidance and my analysis. That was it. And this member made over 380%. This member made 200% just in the last 3 days, guys. This legend made 88%, this legend made 22%, and this legend right here made, boom, 270%. That's just today's return. This member made 580%. Absolutely amazing trades. This member made 200%. This member made $22,000, 7% on an all equities position, no options. So that's extremely impressive. $76,000. That's worth more than 150 years of subscriptions to the Money Time Machine, a legendary trading community. And he made that just in a single day. Absolutely incredible. Here, 33%, 340%. And that's from 88 bucks Monday. Can you believe that? $88 to over $2,700 in just a few days. Boom, 1,000% on Netflix. By the way, guys, this trade was posted by one of our legendary members. He posted this trade setup before anybody else, and he made over 1,000% on this trade. So absolutely incredible. Congratulations. And I have so many more of these, guys. $72,000 here, 67%, a couple hundred percentage points of gains here. Boom, 180% and 156% today, and a total return of 270%. I have so many of these, guys. This is what the trading community looks like. If you scroll down, you'll be able to go to the gain porn. This is an open channel to anybody. You can go and check out all of these posts. And I just have to congratulate all of the legends today. Absolutely incredible. I could not be happier, guys. I'm so happy for you. I really love seeing gains on the Gain Porn channel. I absolutely love it. I absolutely love seeing legends making money, real life changing money. We're talking about $70,000, $60,000, $80,000 in just a few days. That's nearly double what the average income is in the United States, made in just a few days. Now let's go back to the analysis. I want to point out something very important that I did post in the trading community today at 8:45 a.m. Eastern time. This is the lowest close on the SPY, the lowest hourly close on the SPY. I was talking about this. Look at this, guys. This was the lowest close on the SPY. Look at that. Since the beginning of this consolidation slash distribution phase, this was the lowest close in over a month. We have 3 red days on big volume. Look at this. Absolutely big distribution volume. Look at these volume bars. Significantly larger than the entirety of the month. We had selling, and continuation of the selling, completely destroying this support line. The red day today came after an indecision candle yesterday, confirming that a directional decision has been made to the downside. This doji, or spinning top, I should say, a spinning top candle, everybody, is a candle that looks like this, right? A small body and 2 big wicks to either direction. These spinning top candles usually mark indecision in the market. Neither the bulls nor the bears won. It's been an indecision day, and usually these indecision days are followed up by very big candles the next day, usually confirming a decision to either direction, to the downside or to the upside. In fact, I'll show you an example. We had a spinning top here. Then it was followed by this massive green day. And if you remember, guys, November 30th, that's when the Fed came out. That's when Jay Powell came out with his speech confirming a pivot slash a pause in interest rate hikes, a slowdown in the rate of interest rate hikes, and that's when we had that significant rally to the upside. Another example of a spinning top is this. Again, spinning top, and then we had significant sell-off the day after. We had a massive gap down. We have another example right here, guys, a spinning top candle, and a decision was made the next day to the downside. We flagged and we continued to sell off. Now, what is interesting about this candle is that the indecision came after we had already gotten the news, after the Fed already came out with the announcement that they're going to raise interest rates at least twice next year, 25 basis points next year. And after Jay Powell confirmed that they will pause interest rate hikes for at least the entirety of next year. So rates will be higher for longer. So that was interesting. The market did sell off. We did then see this somewhat of an indecision candle. It's not uncommon, guys, to see an indecision candle on a really big news day. And unfortunately, guys, indecision candles at the end of a trend usually indicate weakness is coming or strength is coming, depending on the trend. So the trend was up. We had an uptrend. We had this significant rejection, confirming a double top. Then we had an indecision candle, and it came at the end of this uptrend. Usually these confirm continuation of the selling. In fact, I did talk about this in the trading community yesterday, and we had that confirmation today. We have now broken down below the support line that's been holding since October. This bread support line has held since October, guys. So this breakdown is very significant. All of these are major bearish developments, and they do confirm the double top. Now, we were very fortunate in the trading community to be able to catch the top exactly. We started to short exactly at the top. That's why we were able to catch these 100 plus gains on fairly longer term positions. Now, at the time of posting this, one of our spreads was up 70%. At the close, it's up 100%. This trade is up 50%. I already took some profit on this position. And so we've already achieved 100% of this 1000% target and 50% of this 500% target. Yes, there's going to be significantly more pain to come and significant more gains for the bears. So guys, I do post every single trade and investment that I make in real time right here in my trades, and I also do pre-market, intra-market, and post-market analysis for the stock market here in the live analysis channel. I also post a lot of trade ideas and trade setups, as well as investment ideas in the investment ideas tab, and I also post my weekly watch list and weekly expected moves for a lot of stocks and major indices in the watch list. I also post live links to my charts. That is a link to every single chart that you see in the videos. You'll be able to click on a link and will take you straight to the chart. You'll be able to see all of my trend lines, my wedges, my annotations and targets on these charts. I also have a trading resources room where I talk about every single indicator that I use, how to read it, how to set it up, all of that good stuff. Really extraordinarily valuable stuff. Things that I learned over 7 and 8 years of trading, all distilled to its essence here in Trading Resources. Probably the most valuable part of this trading community. We also have a plethora of member areas where our legendary members share investment ideas, trade ideas, charts. We also have the arena where we are now in the midst of our December trading competition, and the winner is going to earn $1,000 prize. Again, guys, all of this and much more in the trading community. Check out the link in the description to join. We do have 2 membership tiers. The Living Legend membership, which is $50 a month, but it only comes as an annual plan, and you get access to every single room in the trading community. Then there's the Ghost Legend membership, which also gives you access to all of the rooms in the trading community, but you will only be able to see what is posted. You will not be able to interact and post in the various rooms. You will only be able to post in the graveyard. That's because we do have a 1,000 members cap, because I only have so much bandwidth and time to be able to dedicate to you guys, answering your questions and interacting with you. So the Living Legend membership is capped to 1,000 members. And Living Legends are able to post any question they want to me in the Ask Questions Here thread. I do have a 30% sale on the annual Ghost Legend membership, and I also have a discount code. I will not post it anywhere. I will only say in the video. It's Legend, LEGEND, to get 10% off on top of the 30%, so that's 40% off the annual membership. The first 15 people to use the discount code will get an additional 10% off. Again, the code is LEGEND, LEGEND, and you can only apply it to the annual Ghost Legend membership. Now let's take a look at our friend, the triple Qs, the NASDAQ. Absolutely nasty looking breakdown after putting in a triple top formation, right? The NASDAQ has been significantly weaker than the S&P throughout this rally to the upside. We had a double top in the S&P, and then we have a triple top in the NASDAQ, an indecision candle, and a confirmation to the downside today. Now, the weekly expected move for the S&P, guys, is actually at $380. So we could see significantly more pain tomorrow. We don't know for sure. However, what we do know is that max pain for this week is at $390. So we could see the market close at 390 this week, Friday, and then continue to sell off next week. The triple Qs continue to significantly underperform the market, and they will likely continue to underperform for a long while. Now, my target for the S&P 500, guys, for this leg down in the market, and I suspect that this leg down will be very long, very painful, and will probably end sometime in March of next year. That's right, March. I actually expect the market to sell off all the way down at least to $320 by the end of March, or as low as $300 by the end of March. So between 320 and 300 by the end of March of next year. After that, I expect the market to attempt one final recovery. It fails, and then it continues to sell off. That's right, continues to sell. Even more pain, all the way down here, $250 on the S&P 500 to retest the pandemic lows and the late 2018 lows. I think the market will try to find a bottom then between September and October of next year, and that's when I'll be switching from being long-term bearish to long-term bullish, buying up a lot of my favorite companies. Let's take a look at the Dow. Again, continues to be weak. We had this rolling over look, right? This rounded top. We had a double top alongside the S&P. We had an indecision candle, confirmation to the downside, and more pain is coming for the Dow, just like everything else in the market. Let's take a look at this chart. This is an extraordinarily valuable chart. This is the triple Qs, the NASDAQ divided by the S&P 500. And why is this chart valuable? I did in fact talk about this in the trading community just a day ago. We had this false break to the upside. I talked about this false break. I knew it was a false break because we had this rally, a gap and crap, an indecision candle, and then we had the confirmation to the downside. We had this bear pennant, right? We had this triangle looking structure. It's a bear pennant because we had a sell-off, and then we had this triangle, and what happened was the market tried to rally, it got rejected, it sold off, and these rejections, these false breaks produce significant weakness in the market. I talked about a similar looking structure in the IWM in the last video. It looked very similar to this. On the weekly chart, we had a false break, and that false break continued to break to the downside, confirming that we'll see significantly more pain ahead. Let's take a look at the VIX. Again, a very common thing happened with the VIX. We had a gap. This gap confirmed the top. I talked about this, guys, in the trading community. When these gaps occur, it usually confirms the top in the S&P. In fact, let me show you exactly what I'm talking about. Let's add the S&P on here. This is the S&P 500. Take a look at this. We had a gap in the VIX. It was created by this significant sell-off in the S&P. This gap confirmed the top here. We had a retest of this gap and then continued selling. We had the exact same thing happen the last couple of days. We had this massive gap, this boom right here. It confirmed the top in the S&P. Then we had the selling continue. We filled the gap. We had a retest. And now we're going to see significantly higher volatility in the market and more pain in the S&P 500. We had the exact same thing happen in April. Look at this. We had another tiny gap right over here. The market sold off. It left this gap. The VIX left the gap. It rallied to the upside. Then it left this gap. We had a retest, and then we left another gap, another big gap. Boom, right here. It confirmed the top. We had another retest. We filled this gap, and then we had massive selling come after that. The last few days in the S&P were very similar to the late April period, this period right here. I even talked about it, if you guys remember, right here when I talked about the S&P 500 breadth, right? I even put these vertical lines to say that this day is the exact same as this day. This was the S&P, down here in the blue and black, right? We had this attempted rally. The next day we rallied, boom. We had the same thing the last few days. We had this attempted rally. It failed. I even had this red line drawn out from the last video. It failed right here, and that confirmed the top for me. And I went short with a massive amount of money. I'm talking about $100,000 plus shorting the market. I was so confident because we already had the VIX sell signal. We also had the breadth sell signal. This sell signal, the breadth sell signal, right? We had a top, an attempted rally, failed, and then we had a sell-off. We also had, guys, the S&P 500 on the daily chart. Right here, we had a cross down. We had another rally with a significantly negative divergence, right? We had retested the high, but the PPO failed to make a new high, confirming a bearish divergence. And then we continued to sell off. We just had so many sell signals that I talked about in the trading community and in my videos. We also had the dollar bottoming, right, in this descending wedge structure, which is a bullish bottoming structure. These descending wedges are bullish structures, and a bullish development in the dollar means the dollar is going to move up. And because it has a very strong inverse correlation with the S&P 500 has been selling off, and it will continue to sell off very aggressively in the next several weeks. Now, the US 10-year yield, let's take a look at this. Boom, a double bottom with significantly higher low on the PPO, confirming that this is indeed a double bottom, and we are going to likely see the 10-year yield continue to rally at least to 3.9%, at which point we could see a rejection and the continuation of the sell-off in the 10-year yield. Now, higher yields will only push the market even lower because they crush valuations. The higher the yield, the more attractive bonds are, and the more attractive bonds are, more money flows out of stocks and into bonds, crushing the S&P 500. Let's take a look at another chart. I talked about this in the last video. This is a descending triangle, a bearish structure. Now the difference between a descending triangle and a descending wedge is that the descending wedge is bullish. It indicates a bottom. The descending triangle is bearish. And here's the logic behind that. Here's the market psychology behind it. A descending triangle confirms that the market has been putting in lower highs. And what does that mean? It means that bears have been getting more and more courage to short at lower levels. That means that bears are going to get much closer to the support level of the bulls. And this support, it gets tested once, twice, 3 times. The more it gets tested, the higher the chance that it breaks. And we had that break today. And this ratio XLY divided by XLP is a risk barometer. XLY, consumer discretionary, divided by XLP, consumer staples, is a ratio that looks at the relationship between risk taking in the market. When there's risk taking in the market, we see consumers discretionary stocks outperform consumer staples. When we see defensive posturing in the market being fearful and defensive, we see consumer defensives like staples significantly outperform consumer discretionary, driving this ratio to the downside. I hope that makes sense, guys. So I want to talk about the SMH, the Semiconductor Index, quickly as well. This is the SMH, and it's a great, again, risk barometer in the market because the SMH has been the best performing sector in the S&P 500 since 2014 to 2021 for 7 years straight. And so when there's risk-taking appetite in the market, we see a lot of money flow into semis. And then we had this massive rally in semis. We actually rode some of that in NVIDIA and AMD. We took some profits. Then we had this consolidation / distribution. I should say distribution rather than consolidation because it was a bearish looking structure. And so we had distribution, selling, triple top, confirmation of that sell-off in the S&P and the triple Qs. And the SMH will very likely now take out the support level as soon as Friday, if not then next week, and more selling. Again, we were able to catch the top exactly. I did open a significant short position in the SMH here that I expect to net over 1,000%. Yes, 1,000% by March. We've already realized 100% gains from this position. So we're only a tenth of the way through, there are going to be a lot of opportunities to short the market, guys. So much money to be made here if you are on the right side of the market. This is Nvidia, one of the biggest semiconductor companies in the SMH. I think it is the biggest. In fact, we did have this massive tombstone candle, right? It looks like a tombstone, a massive wick to the upside and a narrow body to the downside. These candles, guys, always confirm tops. These tombstone candles always confirm tops when they come at the end of a trend. We did have this very long-standing uptrend. Then we have this significant rejection candle, this tombstone candle, and Nvidia will very likely now take out this $150 level very soon as next week, if not the week after. It just looks very weak. Now let's take a look at the summation index. The summation index is down here, and very interesting observation that I made about the summation index and the oscillator below. This is the oscillator down below it. Now, if you notice, guys, when we get this, when we get these attempted rallies on the S&P and the oscillator moves from red to green, these usually mark really amazing shorting opportunities. Look at this. Let me mark these moments. We had, look at that, perfect shorting opportunity. Another one right here. Look at that, perfect shorting opportunity. Let's take a look at this one. Again, perfect shorting opportunity. Let's take a look at this one right here. Again, perfect shorting opportunity. Boom. Again, perfect shorting opportunity. So these attempted rallies have been perfect shorting opportunities. Money in the bank if you know when to enter and exit the market. By the way, guys, this chart, the exact same chart, is available to Living Legend and Ghost Legend members in the trading community. I do have a live link in my charts right there, so you can click and you will be able to see every single sell and buy signal. We did have a cross down here. That was the first sell signal, and then we had this beautiful attempted rally, failure, and a confirmation of the sell signal. Let's take a look at another beautiful chart. Up top, guys, is the 5-day moving average for the put to call ratio. The put to call ratio measures the ratio between puts, which are bearish puts on the, which are bearish positions on the S&P 500 versus calls, which are bullish positions, options positions on the market. And so if you notice, guys, the market has been putting in higher highs, even though the put to call ratio has been making higher lows. Meaning every single time the market has put in a higher high, more puts relative to calls have been opened, and that just indicates more and more bearish sentiment. Look at this. This was the highest high that we put in on an opening basis, right? We matched the high back on December 1st. But if you look at the put to call ratio, look at this significantly higher put to call ratio versus the top back here. Again, another small hint to look at, confirming that this indeed was a double top and a significant topping formation. Another hint was this double bottom. Look at this double bottom in the PPO for the put to call ratio. This exact setup again happened back here in late August, confirming the top. I swear, guys, it's like the market is on repeat. Perfect, clean signal. You just need to know where to look at. Again, this chart is available in my indicators, in my charts in the trading community. Now let's take a look at the fear and greed index, and look at this. We had this rolling top formation in the fear and greed. We are now going to cross below 50, which is a neutral territory. So from greed to neutral, and market momentum has now crossed down below the 125-day moving average for the first time since November 10th. So this is very significant. Stock price strength is weakening. We saw breadth collapsing. We were able to call the top based on breadth as well, which was this chart, guys. Again, this chart is also available in my charts if you want to check it out in the trading community. Then we have the put to call ratio, another beautiful indicator, and the market volatility. So if you notice, guys, I use a lot of the same indicators that mark the fear and greed index by CNN. I do track market momentum. I do track breadth as well as put to call ratio and market volatility, but I track it more surgically, more precisely, day by day in my charts, looking for patterns and fractals. and so far it's been working out perfectly for us. The 50-day moving average for the VIX is going to be taken out very soon as next week. I suspect that this 50-day moving average will be taken out very similarly to prior sell-offs. Look at this. The VIX took it out just a few days into the sell-off. Same thing here, and I suspect the same thing will happen. So more and more pain next week, guys. In fact, the S&P 500 will likely attempt to fill this gap, this nasty gap left from early November at $375. This gap could be filled as soon as next week, so expect a lot more pain ahead. Safe haven demand is growing. Bonds are outperforming stocks. As this ratio moves to the downside, it means more and more money is flowing out of stocks and into bonds. Junk bond demand is also weakening as more and more money flows out of junk bonds and into the safer investment grade vehicles. Now let's take a look at the economic calendar. This time, guys, we did have jobless claims coming in below forecasts, again indicating that very strong jobs market. And the way the market reads this, guys, is that strong jobs means higher core inflation for longer, because it means stronger incomes for families, and that will only translate to the Fed pushing interest rates even higher for longer, crushing stocks. That's why you see the S&P 500 crashing today. Retail sales are also declining. So this is a very bad combination, right? We're seeing retail sales going down and jobs going up. That's really bad because it's a double whammy, right? The market sees two things: jobs market very strong, incomes very high, meaning inflation is strong. But then you see retail sales coming down, which means weakening economy. So we have the worst combination ever: weakening economy and still very strong inflation. Friday, we'll have the PMI flash that will give us an idea into, again, the economy, the strength of the economy, specifically manufacturing and industrials. Please, guys, do not forget to smash that like button. Unfortunately, not a lot of people saw the last video, and it would have saved a lot of people a lot of money and made a lot of people a lot of money. So please, guys, do like the video if you enjoy this content, if you appreciate the work that I put in. These videos are free, completely free. Really, the only two ways you can support me is by joining the trading community and by smashing that like button. So thank you so much, everybody, and I'll catch you in the next one. Bye-bye.
Oh, wow.